Hello everyone, welcome you to my YouTube channel. This is my first video of the series Accountancy. There would be coming many more. I would just wanted to start off um, with what is accountancy, just maybe discussing it a little bit. Let's jump right in. So first off, what is accountancy? You might have heard your friends talk about it, or maybe, your accountant talk about it. Um, It is essentially all about data. When you're in a business, you have a lot of data that you want to look at, that you want to read, that you want to be able to read. And accountancy does just that for you. It records the data. As an accountant, what's their job? They record the data. They record the transactions. They record the money coming in, money going out. They record the products that a business sells, going in, going out, how they're made. Are this did we get them from the suppliers? Are the suppliers paid? You know, keeping track of all those things. We record data. We categorize. We categorize into different categories. Essentially, you want to categorize all the things that you have as assets or liabilities. The activities you do as either revenues or expenses. These are the big words in accountancy. Not really big if you ask me. Um, Maybe for you right now, but yeah, these are kind of the categories that we make. Um, we classify them, we put them in different categories, we present it. We present it in a readable manner. We present it in a concise manner. We want to present it making short. You don't want to tell the whole story to everyone, right? If you're trying to do something with the data, what you essentially want to do is to make it short, to make it understandable. Why? Because why are we doing all this? To make some decisions based on this data, right? Um, when you see something, you want to do something with it. You want to make a decision. Let's say I calculated the profit made in last month, made in September. What can I decide based on that profit? I can decide to use that profit to buy more things to expand my business, or maybe based on my previous um, sales figure, I might want to save that profit to use it maybe in an emergency, you know. So that's kind of decisions that you make. Um, we also use this data not internally, not only by the company itself, but by all the interested parties. Trust me, it's more than us who is interested in our business. And then what do we essentially use it for? In very simply, in very simple words, we want to make comparisons, usually, most of the time. Um, we want to make comparison on the basis of time, from past to present, from present to future, to make predictions, or with the competitors. How are they doing it? And how do we want to change our financial position and financial strategies? So interested parties, that's the word that I use. It's a very Gen Z way of saying, I guess, the users of financial information, the information you generate in accountancy by processing the data. Who are the interested parties? As I just said, internal people of the company, of the business. It would be the managers, the one who would be deciding how much to sell, what to price the item. Um, the directors, the CEO who founded the company, whom will be taking the major financial decisions, they want to see how the company is doing. So they are interested in the financial position of a company. Auditors are the people who check if we are doing the accountancy thing right. They want to make sure that we are not cheating, we are not hiding our profits, or we are not showing undue losses or anything which is not ethical at all. Investors are interested in our data. They want to see if our company is earning enough profit so they can invest in our company in some way. Competitors are interested. They want to know what strategies are working, right? They want to know what strategies did we use that worked for us. They will see if we earned profits, if we, expanded our market share. If they see all that happening, then they know it was a successful one. They might want to copy it. They might want to do something different. Um, general public, why is it important? A company has a goodwill, you know. Um, they, public, They know when a company is doing well, and they want to do business with a company which is doing well. They see the reputation of the company, and that reputation, essentially measured in dollars or rupees, is the goodwill of the company. Not the exact meaning, but that's what we want to know for now. Then the stockholders, the people who are the actual owners by terms of buying the shares of the company, um, are the stockholders, and they're interested in that information because they will be getting income in the basis of dividends, in the form of dividends. They might be getting the income if the company is making good profit, or if they're making losses, then essentially the stockholders are having a loss too because they are the owners. They have put their money into the company, so they want to know how the company is doing. Government. Um, all the companies do pay taxes and have to abide by the government regulations. So government is interested in knowing the financial position of a company. So simplifying it, you might have again heard your friend say matching the balance sheet, that it matches for them and it didn't match while they're practicing it, or preparing financial um, documents for a company. You want to do that. You want to make a balance sheet and balance it. That does that mean is you want to see if your money, the owner's money, and the money borrowed from outside, which is called liabilities, um, in various forms, match the assets that you have in the company. If you have enough, you know, and are they, if the presentation is correct, it's correct when the balance sheet matches. Um, the very simplistic use of accounting, as would be done by a sole proprietor, would be to calculate profit. If they're just making money from their business, it's enough. And if they're doing just that calculation, it's also accounting. They might be interested to know if they're covering their expenses, if they're able to pay what they're um, buying for, what they're doing business for. It's good enough. How much to pay? You might want to keep track of how much you want to pay to other people, and that's essentially accounting. We want to know if we have cash on our hand, you know, um, that we can just use as working capital. Again, big terms maybe, um, but it is what it is. And yes, cash is different from profit. You might be having $1 million of your profit in your company, in your business, and you still might not have any cash. And that's very much possible. And you'll know in one of my next videos why that happens. You might want to check if you're a sole proprietorship, or if you're like a couple of partners, might want to know what's my net worth. How much more assets in comparison to our liability and equity do we have? That's kind of um, what makes it net worth. And you might be interested in a company's net worth. Then investors, or as a partner, you might want to know how much should I invest more, or should I invest anything at all in this company. Um, so it essentially, as I said, is making decisions. It's about keeping a track so that we can make decisions. Most of the decisions are about money, but some things might not be. Um, what are the things that might not be? But again, they have a financial aspect to it because accountancy only records financial transactions. Always remember that. Um, but how do we see the non-financial aspects? Because if it never happened, you never knew. But then that was a conclusion that you drew on the basis of financial information. For example, if you were a small business, you see that you need help, you need an extra employee, but you see you don't have money in your company to do that. So you will not hire a person as of now unless there is a significant profit so that you can keep paying the employee for next 6 months that you need them for. And since you never hired somebody, it's not an accounting transaction. So you can't see the decision in your books, but then that's the decision you made based on your books. And I guess that's all for today. Thank you. Have a good one.